How's it, guys? I'm just sharing something quickly that I've been using, and it looks very promising. It's a few concepts that we need to implement into a strategy. So in short, we understand regardless of time frame that you're on, but the first rule of this strategy is understanding time frames and using multiple time frames. The higher time frame overrules the smaller ones. And what I mean with that is, when it comes to smaller time frames, is that your monthly time frame will be having much stronger point of interest that gets respected over your lower time frames that gets respected. For example, if we use the concept of boxes, understanding that price moves up before it moves down. So they move the price up to liquidate and then they break lows. And here we can see the same thing happening here again. They move the price up before moving it down. And it only gets validated once it breaks these lows. We will see that repeatedly the chances of being successful on these retests, this point of interest traders style, is on a monthly is much stronger than a 1 minute or 1 hour time frame. So basing this strategy on any currency pair, any chart, we can see that GJ has come back to this point where they push the price up only to move it down. So this apex move actually happened, this entire move over there. And we are back in this monthly point of interest box. So we know this is more than likely a supply zone, and we will need to refine it down to a lower time frame in order to get good probabilities, and we will be looking for sells in this area. And basing it on this, we will need to define where our demand level is. So technically, the last bearish candle before a bullish trend happened is here. So that's our demand, and we can see our price is tapped into it. And maybe we need to, this entire move up, we will need to refine where our true supply zone sits. But on an intraday level, this is very difficult to do. But this will enable you to catch very long trades for swing. So let's see what the weekly has to say. This entire block has moved down, it got validated when it broke here, and our next point of interest is down here. And this is our point of interest that we are interested in. And therefore, we can start looking for sells. We can even take it up to that level and say this is a potential supply and demand zone that we're looking at, as well as if we connect the lows with each other, like so, we can see a bit of a liquidity trend. Something similar like what happened over here, created a trend to be broken, and we can see something very similar happening here. If we look at the daily, let's see what we're at. The last bullish candle, we will need to zoom in. So let's be fair. Last bullish movement is over there. And now we are starting to refine various zones. So this one might still be in that zone, but we can see some interesting things happening here. We can see price has started to move down from this, and that candle over there on the daily is a point of interest for us, and we can see already that there is some rejection happening over here. But okay, let's refine it a bit more. There's a bit of a big trend over here already that we can see. So over here, this is a matter of testing out what has happened. It jumped from a demand zone up into the supply, consolidated a bit, but also it created a bit of a liquidity trend. It created a supply zone that got retested and rejected. And we want to mark out these things because we want to see where we're heading to. So we want to understand the market structure. So that zone has been tapped. It has created potential new demand zone. And we just want to get the order flow going. Tap into that one. And we can see our price tends to move. So technically, this is our last movement down before moving up. That movement down, so we will be, if we're looking for shorts from here, we want to be targeting these areas. But we need to bear in mind that it is a bit of a liquidity trend that has formed. And we are in a big supply zone over here that we could see historical evidence that it is rejecting. As well, we need to remember that price tends to break highs and fake out before moving to the downside. Let's not just look at lower highs and higher lows and so forth. Okay. So 4 hours, what are we seeing? We can see it is rejecting from this. So on a 4-hour trend, this entire area is a supply zone, and we might take it up, and we will use a fib level to confirm. So people will say, how do you know you're selling in an uptrend? Well, let's not look at it like that. Let's look at the liquidity that it is there below it. We'll mark this as a liquidity trend, and higher time frame supply and demand levels we identified. We are seeing the rejection currently, and actually this looks like a very good shorting opportunity right here. So once it tapped that 70% fib level from the high to the low, let's just refine it a bit more. We can see on that level we could have taken an entry, move our stop loss. It can still come up to this level, but I think because it tapped this level, we are fairly sure of entries, and we might be able to target at least this level, which aligns in the zone of the -27. So let's look for a trade like this. This is a good risk reward ratio trade from the 4-hour all the way down to the 1 hour. We know the higher time frames are likely to reject any more orders to this upside, and we have formed plenty of liquidity to the downside. We are also taking in mind time. We know that London session normally sets up the moves for New York, and the 15-minute looks very good for a sell. So on the 15-minute, we will want to see 3 candles forming like that before moving our stop loss to entry. It's part of our rules. If we look at the rules that we made, we can see, so just go to the text again. Last bull, okay, we understand the supply and demand boxes. We used fib levels. We marked out our targets. And reversals. We know the types of market structure. We know reversals are likely to happen in our supply and demand zones. So we can see, so it's a rally, and there we started seeing big rejection, and we can see it's a retest. We can see the biggest volume will normally come in New York session. And so it is now basically New York session, and we will see the Tokyo and Sydney sets up. Okay,